Okay, so a very good evening, everyone. Those who have joined and who will be seeing us as a recorded session. I welcome you all to the Market Insights live streaming episode where we try to understand the markets a little bit better and we try to make sense and we try to uh, you know find out new trading opportunities and learn certain concepts which will be helpful for us, right, and which will make us money in the future. So yes, it's great. Let's start today's session. So from the previous session, we came to understand the amazing possibilities or trading opportunities that one can get, right? So it is the amazing opportunities that we can get from zone analysis and all the other technical aspects that we are working on here. The technical tools, the technical analysis concepts as such, we have not taken up any indicator right now. And to give you just a heads up, yeah, I'm going to also take up a technical indicator series very soon, in which we will dive in deep into different technical indicators, different clubbed indicators, how to use them, and what is the meaning of those indicators in order to understand and use them better, right? So if you purchase something in the market, so you must know now what brand it is, or where what material that thing is. Say for example, if I'm buying a t-shirt, I must know what kind of a fabric it has, what kind of a brand it suggests. So I must know everything about that particular thing, right? How it looks, what is the color, everything I must know before purchasing that thing. So before using that thing, before consuming anything. So also this is also the case when we are talking about technical indicators. Many people don't understand technical indicators and they try to make sense out of it. They try to use it, right? So multiple times they fall into the trap of false signals by a particular indicator, which many of my friends right now would be facing, and many of you guys who are watching, they might be facing this problem. So obviously we are going to take up that, absolutely. And but before indicator analysis is just a small part of the vast ocean of technical analysis. I'm telling you this because most people understand synonymously indicator analysis and technical analysis is almost the same, they tell, but it is absolutely wrong in any sense. Okay, in many sense it is absolutely wrong. Technical analysis is completely different from, hello everyone, welcome. Yeah. So technical analysis is completely different from indicator analysis. It is very, very important to note this. An indicator analysis is a part of technical analysis. This is what the difference is. So without further ado, we are going to see certain things today. We are not going to show you any PPT as such today. We are going to be very raw today. We are going to go through the markets more so that we can get more exposure. We can apply a lot of concepts that we have learned in the previous live sessions. And we can also, turn by turn, I'm also going to ask certain questions of the concepts that I'm applying right now in the market, whether you guys can understand them from the previous sessions itself. So everything comes out and it combines into a proper channel itself, right? Everything is getting encompassed in our current analysis as such. So we are doing this. Let's start our session. So we had an outstanding week for the market. It was an outstanding week for the market as such, and a lot of data laden week it was, as I had previously suggested to you guys in our previous live streaming sessions as such, right? So let's see where the market is headed right now. Okay, so here is the chart in front of you, and you can see, I suppose, everything. Okay, this is GBP USD. This we will take up later on. We'll first go to the our most favorite instrument as such. One of the most favorites of all time, that is this one. Apart from that, before doing any analysis as such at this point, let's just go to the news events. Okay, in the news events previous week was extremely breathtaking, I would say. Right, it had quite an impact on the market. The market was completely absorbing the news that was coming out. The first important, we are just going to remain biased towards dollar. So let's see. The first thing that came out was ISM manufacturing PMI. Why I'm noting this is it doesn't have any significant impact as such, but I'm just going to show you a comparison between these two things. So remember, the manufacturing PMI was low, quite low. Okay, almost near to shrinking. The economy of manufacturing is, but after a few days we see ISM services, I suppose. Look at this. On 5th of October, that is Wednesday, previous Wednesday, we had a session, I suppose, on 4th of October, right? The zone analysis was on 4th of October. So we saw Chair Powell was speaking, and Jolt's job openings was there. Just after I closed my session, so Jolt's job openings came out to be quite bad. So this was one of the impactful data. Apart from that, this is the difference that I wanted to tell you, that ISM services PMI is quite good, 56.7, almost increasing, right, from the previous data also. The previous was 56.9, it has shrunk down to 56.7, but it is more than the expected rate of 56. So ISM services is increasing, but ISM manufacturing is not. What does this suggest? This suggests that the services sector is quite strong, and that is why when it came to the NFP data on Friday, NFP data on Friday, this blew everyone's mind. Although I was quite prepared for a very cut to cut data for NFP, 263,000 instead of a 248,000 that was expected by the market, that was already counted in. But this was the extra, right? It came out to be a premium, right? 26,000, 263,000, isn't it? And apart from that, the average hourly earnings did not come down, and unemployment rate also came down, which is a good sign. So overall, the USD labor market is quite strong. Okay, I don't know which Chavanprash it is taking, what tonic it is taking, but it is really good for USD JPY. Yes, very good evening, everyone. Yeah, so with Chavanprash, this USD JPY, the United States market is taking, labor market, I don't know, but it has been consistently very high. Okay, it has consistently broken the previous expected forecasted levels. Look at this, if you will see this data table, you see from May and even more than that. See, skip to the graph, not this one. Yes, it has been always in the green. It has always been in the green, and since May also, it has always come out to be more than the forecasted range. If 390,000 was the forecasted range, in May, it was 4,228,000, which is quite a high, as uh, you know, as expected, more than expected, right? So currently, last week also, we had last month we had a special NFP live webinar where multiple people were talking about lesser than expected data would come out, because USD is going out. It is, suffering from very high inflation, but the inflation is not impacting the labor market at all, it seems. After such a data, 263,000 is quite high when compared to this particular 250 or 248, right? So accordingly, the market also adjusted for this level. Now if I convert this particular, just remove everything. The time was Friday 6:30, I suppose, if I'm not wrong. Okay, this is the previous zone. Okay, this was the previous zone, and this is the whole idea. Let's see on Friday 6:30 what happens. 6:30, not 5:30, I suppose. Okay, 6 o'clock. 6 o'clock was the data. Let's see what happened on the 6 o'clock wala data. This is the chart, and this is the 6 o'clock candle. Now look at the candle. I want you to look at the candle first. How such news events are playing the market actually. They are not playing any particular way, but it is playing the market itself. Those people who would have longed here or whatever it is, those who have longed just because of seeing this false breakout. There was a false breakout in gold, and I had been telling people to short gold since this point. Since this point, somewhere around 1660, 1670, I had been telling people to short the gold, but it went up. But this was a false breakout, and I knew that this was false. Slowly, it just wanted that spark. Okay, it wanted that incident to happen in order to come down. It was searching for an opportunity for the price to come down, and that opportunity came in the way of NFP data. And NFP data was quite high, which means USD is getting stronger, but gold, which is the counter currency, it is getting depreciated, and that's what happened here. Highly volatile candle, very huge candle, okay, with good amount of wicks. Now you could have shorted at the dot, at the brick of 6 o'clock. Okay, so if I convert it into 15-minute candles, so you see, this is the candle, I suppose, 6 o'clock candle, isn't it? So you see a lot of selling pressure. Open was here, high, it went all the way here. But a lot of selling pressure, it went down all the way to this point, 1701. And then again, it went all the way down in the next 15 minutes to 1691, but it recovered somehow. It recovered, and then it went into a diagonal, into a V shaped formation, and then it could not survive. Then everyone knew that a selling pressure is bound to happen no matter how many people are going to buy gold at that time. Then what our position becomes is this: we have to short in this particular range, 1695 range. Okay, this is the position. Okay, and this was the position that I made. I haven't uh, cleaned anything up. Okay, I haven't cleaned anything up. It is the same thing that we drew when we were talking about the zone analysis. This was the zone I drew. Okay. Now, why this is an important zone? Because I explained it in that particular video. So, and how this path has come into exact force. To be honest, if you want to verify this, you can go into that video and see. At that time, I had made this particular uh, figure. Okay, and it has not been erased since. So let's just clean this up. And I had told you that this is a good zone. We can use this zone in the future. But I didn't tell you when it will be helpful for us. Okay, when it will be helpful for us, I didn't tell you. Now I will tell you when it is going to be helpful. Can you see this? Can you see how the price action has came down? Such a steep action here. Just look at this. Such a steep, just downtown. It is going all the way down. It has taken a nosedive almost. Okay. It has taken a nosedive, but now it is consolidating right now. It couldn't decide, it cannot decide where to go. Okay. Why it has consolidated at this price range only? Right? why? The question is why. And the question, if we know the why, then we can use this any day, isn't it? So if you can go and check, if you want to verify this particular zone that I have not drawn it after this happened, so you can go. The date that you can see here is Friday. This one is, I drew somewhere around this point, 2nd October, right? So 2nd October, I drew it around 4th October, somewhere around at this position only I drew. You can go and check in that video, guys, no worries. So this was the position and how the zone has come into use. This is the use of zone. Okay, this is how zone work, and this is outstanding example of how zones work, and why we just not rely on any indicator as such, why we should consistently, add up more and more tools to our arsenal, isn't it? So that we know more, we know better, right? This is the zone. Now, what exactly is happening right now? Right now, the gold is actually consolidating. It is not, the market does not know where it is going to go, right? Market is confused right now. This is a confused phase in the market, a choppy session, right? What will happen in the future? So, let's see if there is anything in the market that can change this consolidation into a trending market, right? So, let's see. We'll also discuss about GBP. Okay, the today's agenda is also GBP. Let's see. So today is October 11th, right? October 11th. Tomorrow is October 12th, right? So we see tomorrow we have GDP data. Okay, GBP. Any USD data coming? Yes. So the PPI is going to come tomorrow, obviously at 6 o'clock, right? Forecasted is 0.2%. It must increase. The previous was negative 0.1%. So it was quite good negative. Okay, for the currency, for not for the currency but for the people, so that the inflation might decrease in the future for the Fed actually. Core PPI was actually higher, so it had certain problems associated with it because of volatile categories not being included in core PPI. Okay. Next, we will see FOMC meeting will be there. So there might be a higher volatility around 6 o'clock tomorrow in gold, and we can see any breakout. Until then, if it is not breaking out anywhere from this zone is anywhere around 75 to 59, 1675 to 1659. If this is continuing in this manner, then you can continue with this particular range. But if it breaches one side, what does this mean? If it goes up or it goes down, there can be two possibilities only, right? There can be two possibilities, obviously. So one possibility is a breakout. The second one is a cross under. Okay, this is a cross under. This might also happen, and this might also happen. So when you see the price action getting out of this range, that's when you may trade in this particular instrument, right? So this is the situation. Situation A and situation B. Okay, A situation, and this one is the B situation. So I just want you guys to comment which situation you think is most likely until the time we are getting into some other discussion. I want you guys to post your comments in the chat box. Let's see which of you guys are going to turn out to be correct. Which condition is going to happen in the market? Is it A? Is it going to be A or is it going to be B? Now, many of you who have been following me religiously, thank you very much, first of all. And they might know which situation it might be. Is if it is going to be A or if it is going to be B. For those who don't know yet, let's see the daily chart. Okay, this is the A situation. This is the B situation. Trend line is absolutely wrong. It's deleted. Okay, delete this. Okay, Now this one, it is fair to note this trend line. Choose trend line from here and then just draw an immaculate trend line from here to here, right? Now this was breached here. This was a false breakout, so I updated at this point. I will update this point, take into account this point as well. This was a false breakout. Again, it had a false breakout, right? This is the way market works. This is a false breakout, obviously. Although the candle appeared to be very strong candle, this one on 4th of October, the day which we were doing this, the previous live session we had. This was supposed to be a false breakout, and this has how it turned out to be. Now, those who can understand may give the correct option where the gold might go. Okay, so let's do this. So the A is there and B situation is there. Both of the situations can happen. Nobody can say where exactly it is going to go, because today the volatility is a little bit less. The price range is a little bit less, 0.27%. If you can see here, the average movement is 0.27%, which is very low for gold, right? So the volatility is a bit low. After our live session, that is after 6:30, after 7 o'clock, we might see a little bit of a more volatility in the market. Okay, little bit, it will increase. But after that, people are awaiting this particular data, USD PPI. Okay, I'm back. Sorry for the technical difficulty. The laptop just gave up on me. But don't worry, we'll just recontinue. So let's resume our session. Let's resume our talk, our overall discussion on the market. So here we were talking about the PPI data which is going to come out tomorrow. If it is higher than expected, then the USD will appreciate, and if it is lower than expected, then it will depreciate USD. So the counter currency will accordingly adjust. Getting my point? Counter currency will accordingly appreciate or depreciate depending upon the PPI. However, note this: PPI is not very impactful data. Very much impactful it is not. Okay, so we have to see the very much impactful data, which is CPI on the other day. That is October 13th, Thursday. Thursday is going to be quite an interesting day. The volatility will be higher than usual days, and the people will be waiting for this data to come out, CPI, because not only month on month data is going to come out, but also the year on year data is also come out. So this is something that an active trader, a professional trader, keeps its eye on, right? So apart from that, unemployment claims is going to be happening, but that doesn't matter so much. Okay, after that, one important data that is going to come out is core retail sales. This is also good. Okay, this might not impact the market as such, like in a very huge way, just like NFP or CPI will do, but it does give us a whole idea about the demand side of the economy. Okay, how much sales is actually happening. that is denoted by this particular indicator. This is also economic indicators, just that these are fundamental indicators. Okay. Apart from that, Friday is going to have also consumer sentiment, which is quite good. Consumer sentiment, we will try to understand where the consumers are headed, what they think about the economy of USD. That is on Friday. So this is the whole data for the week for USD. Okay. Now we will switch our attention to one of the most important data, one of the most important and highly talked pairs, especially in the week that we had previously. Now, this pair has been suffering from a lot. GBP has been suffering a lot of inflation, a lot of economic and political disturbances, a lot of things, right? A lot of things are happening in the United Kingdom. But still, we see this is the daily chart of United Kingdom. Okay, and let's delete this. And this is the overall view of nearly 5 years, I suppose. Okay, this is the year of 5 years, right? Okay, so this is the overall idea of where the GBP USD is headed. It has extremely created a beautiful rounded top. Okay, it has created a rounded top here and has come down all the way, right? It has this dome shaped formation is called a rounded top. So this rounded top took a lot of time, but however, it is almost immaculate. Okay, it is almost perfect. And let's see what will happen next. Okay, because we are headed into a new territory, into a new trend line that we are seeing right now. Okay, so this one is the newer trend line, and this is quite steep. Okay, so this might not be very accurate, but it can give us a brief idea of what is happening. Now, what has happened in the GBP is that the United Kingdom uh, proposed, first of all, a tax cut, which was taken back. Okay, it gave slightly a boost to the bond market, but then it was taken from the bond market as well. Okay, a slight bond buying scheme was introduced and then it was taken back. Then a tax cut scheme was introduced and then it was taken back. So a lot of economic disturbance is there. There is no clear stance of GBP right now. Okay, that's why you will see so many red candles. I suppose on 16th, I suppose this is weekly, na? Let's convert it in daily. 23rd September, I suppose, was the day when this tax cut was introduced, I suppose. And then it was taken back 2 days or 3 days back. Okay, it was after 2 3 days, it was announced that we are not going to follow up with this scheme. And this is what happened. This is what has happened. Okay, the price went up and then it went all the way down. So what is happening in GBP USD? What to expect in the coming future, right? So let's take up a little bit of understanding of where this has headed, right? What are the actual areas where we can actually work? This one is the first swing. Let's consider this swing only. Very hard to do it on a very small screen, you know? Takes time. Okay. This is kind of a wedge formation because I had drawn using these 2 points. This point was taken on 12th of May. 12th of May, and this one is 22nd of February, and this one is 10th of August, which means we are quite behind this. And this is what is happening. Okay, and the trend line has been respected here. Okay, the trend line has breached itself and then it came back up. So we can allow this wick to fall down, no worries. But the miracle here is this candle's wick. It has taken a support here and then it went up. Okay, so we have got some, I would say, this is the proof that what we have drawn is correct. Okay, this is the proof what we have drawn is absolutely correct. This is a falling wedge, and this is quite a long, I suppose, very long wedge. If we see it from here, 14th of January till now, October, which is 8 months, 10, 11 months has happened. and it is still going on in this particular price range. Okay, low volatility was here, and then now it is in here. What exactly to expect? Obviously, it will go on in this particular range only, as long as it finds a way out of this particular channel. Okay, a lot, a bit of a short term prediction. Short term prediction, we can use certain indicators. Okay, let's use some indicator. Okay, this one is an indicator I only designed. So what it has is multiple moving averages, a super trend and Bollinger Bands, and also a trend indicator. So multiple indicators into one, so that I can see everything at once. Okay, everything at once I can see. So if we kind of change certain options, let's see first the moving averages to see whether it is going to happen something or not. Okay, so let's see. The moving averages is in downtrend. Okay, it is still, the 7-day moving average has not been able to breach the 13 and 26, right? So it is still in downtrend, and you have to look for certain opportunities on the downside only, right? Now we have seen the moving average. Now let's see the other things. Okay, plot the background of this. Right now, there's a stop, there's a resistance here at this point, and then volatility is quite high, but the movement is not quite high. Okay, it is going to shrink, or if some news data comes out, then it will move up. And these candles, which are very small, these are daily candles, and the movement is very less, negative 0.3% this movement yesterday, then 0.63% movement today. It's 0.41% movement, which is very very low considering GBP USD being a major pair, right? So what to expect this week? Let's see. This week is going to be a very important week for GBP, because GBP has to perform now. So the first performance will be gauged by GBP GDP, that is gross domestic product, month on month. Okay, now it has been shrinking as such. Let's see. The previous month it was shrinking 0.2%. It was lesser than what was expected of it, right? The previous was even low, right? And then this was also even low, right? So it is in the negative territory only, the GDP of United Kingdom. But what the market is suggesting right now is, what it is forecasting is that the GDP change will be 0.0%, nothing. Okay, it will remain the same as the previous month. So there can be only two possibilities tomorrow, 11:30. Tomorrow, I suppose, na Wednesday. Yeah, there can be only two possibilities, whether the GDP is going to be higher or lower. Correct. So if it is higher, which is, I suppose, very hard, uh, very unlikely that it is higher, then we can see an upward movement here. Okay, and we drew that wedge, na, where it went. I deleted that wedge, I suppose. Let's bring it back. Okay, this is the wedge. So it will go up probably in this range up to this point, right? And then it may come down. Okay, tomorrow is going to be almost very less volatility. The GDP data cannot impact so much. Okay, so it will impact if it is in the positives, then the currency will move up. Obviously, this one will move up. But if it is in the negative, then it will be thrashed. Now, remember the word that I'm saying you, it will be thrashed. Okay, completely, because it has already seen a new low on 26th of September. It has made a new low, 1.03, right? It is a new low for GBP against US dollar. So it will be completely thrashed because it has seen worse. Okay, it will come down all the way. So to see certain levels that most of our friends might be asking for, might be waiting for, is this, right? These are the Fibonacci levels. Okay, this is good enough because the support is working quite fine. Here it has taken a support on 1.107, right? Now, if it goes down, if it breaks this 1.107 tomorrow after a negative data, then there is no stopping it. Okay, although we can take this particular level as an important level, which is the level 1.08934, right? So this is going to be one of the levels that we need to see first. Why? Because it is almost 38.2%. Now let's see if my calculation is almost correct. So 1.089, 1.075. These are the levels that we can ask if it is going down. These two levels we can target. Apart from that, we can target this also, this level. If it is positive and market is volatile, the positive movement can also be there. I'm not completely rejecting that. This can also happen and this can also happen. Both the possibilities. We have to wait for the data. It is contingent upon the data, obviously, right? And then obviously CPI will also be impacting the data accordingly. If CPI is higher than expected of USD, then USD will appreciate and GBP will depreciate. So it is very highly likely that it is going to go down, right? It is highly likely that it may go down from here, from this position to the levels I just showed you. Okay. So this might be the case. And obviously it is in a wedge only. It is almost in a falling wedge only. So this is a condition of the GBP USD overall. Long term and short term, both things we have covered. And I've showed you the levels as well. Okay, very good. So let's continue. And today's, let's just check if you guys have anything else in mind, any other pair that you want analyzed. So just put your suggestions in the chat box if you want. If any currency you have in mind, just post it on the chat box and we will take it up, because we have covered gold and this GBP. Next we can cover somewhere around like dollar index or something like that. And one small little lesson that I wanted to tell you guys. I have covered the data this week as well, so we have got some time remaining on our hand. So as I mentioned, let's see dollar index. Okay, dollar index obviously is this. Okay, this is the dollar index, and we see almost a formation here, a Japanese candlestick formation here, but this is not exactly a Japanese candlestick formation. Not exactly if we are considering every single criteria to fit in, and the day has got some more time. So what we can do is we can do one long term analysis and the short term analysis of USDX. Now USDX is also quite volatile, and we can work in that particular volatile instrument, isn't it? This is the way it has moved up. Okay, moved up like this, kind of like this was the movement of USDX. Okay, almost a curve, and this has been this is a curved trend line, I would say, right? A new thing in the market, isn't it? And it has been taken multiple times. It has taken support in this range, lower range, and now after a few days of recovery from this downfall, we are again seeing a bearish day. But the American timing is still on hand, right? The American session is still to happen. Where is it? Yes, we might see some changes in this particular red candle. Okay, so let's not wait for that to happen. Let's do our analysis. Let's go to a shorter time frame to get to know a little bit more of what is happening. Now this candle is something absurd, isn't it? This candle is absurd. 13th of September. Some particular data might have come out on this day. It was a huge, huge candle. I suppose this is the CPI wala candle. Okay. The previous month CPI came on this time, and then a consolidation, and then it went up again. So what is happening in USDX is that there is a V formation formed. Okay, this is a particularly interesting formation if you can see. Okay, this is a very interesting formation because it does not provide us any clean opportunity. Any clear opportunity is not here, right? It has not given us a hammer. It has not given us anything else, inverted hammer or something like that. It has not given any sign, and it has just moved up back again. So what to expect currently is that it might go into a downflow. So if we see the resistance of today's, this is the 4-hour chart, today and tomorrow. This point 113.5, just lower than that it has closed 113.45. So this is the resistance for today, and now currently it is on the support. This one R1 is support 112.853. Okay, and has just breached this support 836. Now if this candle is very strong, then it will downfall, it will come down. Okay, so these are the paths that I draw. Let's see. So this everything depends upon this 4-hour candle currently, what is going to happen. Okay, if it is closing below this support, then we can see for a short term short trade, right? But if it is closing on this support only, then there is some of the movement left in the market. There is some movement left in the market which is going to persuade it to go up all the way back here 113. Okay, and looking at the data and looking at the condition, I would say this is likely the course. Okay, this is likely going to be the course of the price action, right? So what is going to happen, let's see by looking at some indicators what's happening. Let's move this out because a lot of things are there. Now the 70 moving average is again above the other averages. So the price action is looking at an uptrend only. Okay, it is looking at an uptrend only, and this, as I showed, 113.85 something is going to be somewhere the support, right? Now this is a red candle which is a small candle. Okay, now both the things can happen. A buying pressure can happen or a selling pressure can happen. Everything depends on this particular candle. If we slow down and see the 1-hour candle, we see there is a breach of the moving averages. We see that the 7-day moving average has come down. 7 period moving average has come down, and it has breached already the 13-day moving average. And it is almost, if this is a red candle, this again will breach the 26-day moving average. Okay, both three these three moving averages tell us where the price is headed, where the momentum is going to be. Okay, so it has been an uptrend along with the uptrend, but now it has breached it, completely breached it, right? It has been an uptrend for a very long time. Look at this. Okay, this has come down to this particular position. Now hourly trade is different than 4-hour trade. What we expected in 4-hour, it is almost the same in 1 hour, right? But it is not exactly equivalent, right? So what exactly is going to happen if this closes down and the moving average has crossed below, crossed under, which is what we call it in uh, technical language. If it is crossing under, then there might be a selling pressure that might come in. For those who are using MACD, for those who are using moving average, for those who are using any indicator based on moving average, then selling pressure might come in, a new selling pressure. Okay, or else if it closes green, this hour candle, then we can see a resumption of this particular thing, of this uptrend. Okay, or a support wala consolidation, we can see both the things. So This can be the situation which I already drew, I suppose, this one. And the next is, this can be the situation. This can be the support, and this can be the situation. And again, it might go down according to the data that is going to come out, and according to the session. The American trading session is going to start at 7:30. So accordingly, it will do. We need to wait right now. There is no clear trading opportunity right now. Okay. I'm not going to make false claims about, oh, this is going to happen, this, that is going to happen. Because we trade on knowledge. We don't trade on assumption or, right, on some kind of a claim, right? This is the condition of gold and hourly. We just saw the daily, I suppose, right? This is the condition. We have been shorting from this particular point, 25, till this point, 64. Now, why 64 is a very important data, very important zone? I already showed you the zone that is covered. Now, if any other currency pairs, so let's take up USD Jpy, which is yet another vanilla pair, which most of the traders like to trade in. Okay, what is this? I have done something here. Let's see. Uh, this is something. Okay. These are the levels that I drew previously also. Okay. This just saves it, and then the whole chart, when I bring it up again, it comes out to be whatever drawings that I did. It resumes that drawing on the chart. So resistance is working quite fine, I suppose. I haven't seen this yet. Not trade in this, so I haven't seen this yet. Okay, no worries. Okay, done. So currently, the situation of USD JPY is quite, you know, peculiar, I would say. It was in a very good uptrend for a very, very long time. And the higher highs that is it is making, it is making many people uncomfortable. Okay. The higher highs it is making, the previous high was, it was made by, I suppose, 145 something. Okay. This is the candle which made the higher high, 145.90, 146 almost. Then it has continued to go up, range up, inch up, slowly, slowly, right? Now this is the resistance. This resistance line is there, red colored line. And above that, if it crosses, then this blue line will be the resistance, and this red becomes a support. I cannot tell you every day because every day it is different. Today it is somewhere around, let's zoom up and see. It is somewhere around 145.860. Okay. And if it crosses above, then the next resistance is somewhere around 146.8. Right. But this area, na, this trend line, it's very important to note that the price never ever gave up on its trend line. Trend line was completely immaculate, and it did not give up on the trend line. This is very important to note. Okay. Okay, this one is wrong. Let's, this one, yeah. It never gave up on the trend line, although it made higher highs, it made consolidations like these, but it never came down and tried to breach it, tried to make false breakouts. It never did that. Okay. This is the good thing about a trending market. Trending pair, trending market, whatever. Today, it is in a, currently in a confused phase today. Why so? Because the market is deciding whether to go up or go down, or both the situations can happen, right? Both the situations can happen. That is why today's volatility is quite low, very low, I suppose, very, very low. 0.06% movement is there today, but that will change as the data flows in. As the data flows in, we will see a lot more different things happening, a lot more volatility. Now I've already told you many a time that whenever the market expects something, okay, when the market expects, okay, yeah, this is going to happen or that is going to happen, something is going to happen, then it waits, it bides its time. It is not, impatient. And that is when I want to conclude our session by saying you guys, by telling you guys one little story, or I would say thought of the day. This is something that I wanted to tell, which will not only improve, it will leave us with a positive mindset, but it will also tell us, and it will also advise us in the times of, you know, problem, in times of when our stop losses get hit, and in the times where we are not going to get much opportunities. It is not a volatile day like CPI day. It is going to happen, right? It is like this day, small candle. We cannot get much trading opportunities on this day. So, what thought of the day I thought would be the first thing is to tell you guys is the gratification. Gratification is satisfaction that we have whenever our desires come true, or whenever we get something, or whenever we learn something. So today's thought, I suppose, should be gratification. Or no matter what we get, no matter where we are, uh, we must be gratified. We must be thankful for what is happening with us and with our fellow humans, right? We must be thankful not only to the God but also to each other, right? So this is the thought of the day. I suppose it would leave us with a very positive mindset, because after this, I suppose everybody will be busy trading, right? Everyone will be trading because a lot of data is inbound, and a lot of, I suppose, I've been able to make sense of this data. I've given you both the opportunities, both the ideas that this way the market can go or this way the market can go based on what data comes out. So inflation rate is going to come out. That is the CPI or a PPI rate, I suppose. Tomorrow is PPI and then CPI. Okay, 13th October CPI is going to happen. Then the consumer sentiment retail sales month on month. So all the 3 days after today are going to be highly volatile, especially Thursday, right? So I want you guys to always grab your opportunity, okay, and always be gratified. Always thank people, right? This is very very positive mindset, because not only when we go out, when we talk to different people, we always forget that we must thank them or we must say to them something of value, right? And when we achieve something, we must remember us ourselves, right? We must remember those who made our day that well, that good, right? Who taught us something, or somebody who told us the way, they showed us the path. If I wanted to go somewhere, they showed us the path. That is the way gratification works. And this small tip, why I'm giving you again and again, why I'm telling you gratification, I will also give the reason, being the teacher and all kind of a thing. I don't believe in that, because I try to learn from everyone, not only myself or not only the books, but by everyone. Okay. Why I'm telling you gratification is important is because gratification leads to satisfaction, right? We get satisfied, and satisfaction leads to less greed. Now, I suppose most of you would be able to understand why I'm telling you this. Okay. If you are less, now greed is not a bad word. Okay, greed is not nothing like this is wrong, right? Greed is good. Okay, as one of the most iconic movies of all times, I suppose, Wall Street. In that, the main protagonist says greed is good, right? So greed is good, but less greed is good. Controlled greed is good. So if we have more gratification, we thank for little things in our life, then we will be more satisfied with little profits every single day. We will inch up slowly, right? Like this, like the chart of USD JPY. Slowly, every day it is thanking and every day it is moving up. We will be like the chart of USD JPY, isn't it? And this will happen to us someday, somewhere, that we are in an uptrend. To remain in an uptrend, we must remember this: the lesser the greed, the more sound decisions you can make in the market. Remember this. This is something which is I wanted to tell you guys from a very long time, but better late than never. This is something really, really which has happened with me, and which is going to help a lot of traders. Because gratification, it's such a small thing to say thank you. It goes a long way. Okay, thank you to the God, thank you to everyone, right? Anyone we meet, anyone who tells us something or gives us something, if we say thank you, we are satisfied somewhere, and that will lead to lesser greed, and that will make us more sound about our decisions. Just because I'm seeing an opportunity, I will not try to grab it, I will try to wait, right? That will create more patience in me. So one little thank you can go a long way. So today's session has been very, very good, I suppose. And you guys have been very kind to join in. Thank you very much. And I suppose ending the thought on a very positive note, I suppose everyone would be liking it. So be sure to drop a like. I never tell you to drop a like. Nobody does that. So no worries. Meet you in the next Tuesday, and let's see whatever prediction, whatever analysis we did today, did it come true, or did it the data that is going to happen? Because I'm not going to be taking a session on that day. So thank you very much, everyone, joining in. Just remember whatever we did and whatever we covered today. So thank you very much, everyone, and happy trading, isn't it?